Hello guys, my name's Andrew, and if you guys don't know already, I'm heavily involved in cryptocurrency trading, and this sort of subject matter is the price breakdown for Bitcoin. So we'll do a lot of tracking for Bitcoin's price and past positive and negative correlations. So, for example, I'll start with this one. This one was on December 12th, and I was right for the most point about Bitcoin sort of having this retracement positive towards 5 grand. And here's what I said sort of as my analysis. Bitcoin doesn't look really healthy right now, but I still expect in the next quarter it can have an upward trend towards 5K. The trend loss is currently at a steep negative correlation as it is. We also know that ADR is at a negative retracement as well, as some financial analysts at Forbes are doing soft bids against BTC, which is true, saying an imminent $2,500 Bitcoin price, with while some institutional investors even predict a dip at an expected step loss. I mean, a dip that's lower than 10% of its peak point. It has a negative of 1.63% in the past hour range, which you have to keep in mind the time that this was posted, and expecting closing today near negative 1.77%. Also, the rune indicators have a negative retracement past 75.7143 with an expected step loss. The CMF for money flow is at a negative 0.4294. However, there's a potential positive bullish trend and divergence, and even with the steep negative correlations, you are still seeing a higher trend towards market dominance. Though let's not get too optimistic. Trace Mayer expected a $27,000 and $395 price by February 2017, according to Bitcoin price, which we all know how that turned out. However, we still know I am hodling, and I even think the Winklevoss twins' prediction of a $5 trillion market cap between 2028 to 2038 is still realistic. Though I have a seemingly long hold position, I will continue hodl journey, but don't know how long it'll last. All opinions regarding this is entirely on a personal opinionated level with some market research involved. So this is an example of sort of actual analysis for Bitcoin's price. Now, there are some opinionated examples like me pointing out what I think about this person's analysis or this person's analysis, but stuff like the CMF for money flow, the CMF for money flow, or what the rune indicators are saying, or how I'm reading the charting patterns, or the price dips and all that, or what the actual trend losses are at, is non-opinionated. So looking at this, it's really important to be able to sort of tell the entire charting pattern and sort of what's going on. And there are multiple indicators. Like one of the indicators I did for Max stop loss indicators predicts at different time intervals when it's actually going to have a loss increment. And I also have a indicator that sort of almost predicts the next day price for every single crypto or stock. So these advanced sort of charting patterns are really important for indicating what will happen when Bitcoin's price sort of correlates. So see, you have a higher CMF right here, and you see a positive correlation, and a negative CMF is indicating negative correlation right there. So all these sort of different charting indicators and indicative patterns sort of is able to predict the trends. So here you have the ADR, which is set at a low percentage. When you see a negative correlation ADR right here, that's when it all goes down. And then positive correlation ADR, negative correlation, positive correlation, negative, positive, spikes, negative. So sort of looking at this whole range for cryptocurrency, it sort of is able to actually give you a really advanced analysis. And sorry about that, that's background noise. Another really important thing is sort of how many times you sort of look at your analysis. So I did ADR again also on December 12th and did just a pure ADR analysis. And as you see here, it starts here, negative pattern, positive, negative, positive sorts, negative, positive sorts. And then the continuation would probably be a positive correlation for ADR, which was the upwards trend. And then it's going to have a negative trend again. It's sort of like this looping pattern. And this is what I said on December 12th prior to that last analysis. As expected, institutional investors are bidding against a bullish Bitcoin, and BTC have suffered one of the biggest market crashes since the BTC Cash hash war. Even Ethereum is taking a worser tumble. Having a 3-month long expectation at a dip of a $5,000 price point is still feasible. I remember hodling all my crypto at a 20K price point, and I am still hodling until now, making me a poster child for the movement. That being said, BTC does have a strong decentralized future. It is very vulnerable, however, to market speculations, opinions, and sorts. In fact, probably even more vulnerable to short callers as a cryptocurrency than actual stocks in the Nasdaq. I'm still optimistic on BTC, but currently just evaluate chart patterns at expected trends without taking into account as many false positives or statistical outliers. So actual market speculation or unknown events that you didn't predict for when you thought there was a positive correlation is a false positive. Also, the price crash is a retracement of negative correlations in the past. So Bitcoin has had these really big negative correlations to the past over and over again. So the retracement of this negative correlation is nothing new. Bitcoin is sort of not crashing, but refacing sort of the chart rally that it had in the past. And as I said, it's very vulnerable to actual market speculation. Now, let's see what I said on November 29th. So November 29th, I have sort of this bear up strategy that I'm looking for trailing. And this is a script I talked about earlier that does predict the actual correlation on whether it goes up or down for the upcoming days. And then you have close percentage and ADR. So this is what I said. I said Bitcoin is trailing around the 4K price for price stability. The negative correlations was a result over the fork of BTC crash, making the crypto industry look bad. However, given recent news and the fact that crypto is still here to stay regulatory-wise, Bitcoin has some outbursts of positive correlations. My overall view for the end of 2018 and price speculation was not consistent given unknown variables in the market. So you always have to look for unknowns, like the actual negative media surrounding it and how people and their market psychology react to that. Even with positive sorts, I would say for short-term holdings, BTC isn't consistent with profit potential. I'm still hodling my crypto, however, blah, 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 and think it's institutionally sound for 1 to 3 years and over holding positions for growth potential in the crypto industry. The investor mindset is to look at BTC as a long-term investment unless doing automated or day trading strategies. So that's very important because actual sort of price speculations on a 24-hour period and how many times it goes up and down for a bidding and asking price is the day-to-day trading strategy. So looking for automated trading strategies that are way different than shorts or even long positions, you actually have to use very advanced indicators and even if you don't use indicators, you have to always consistently be looking at the charting patterns yourself, and the actual trading strategy for BTC pricing is much different. So July 20, this is my actual prediction that was July 20 now. I have my script again. Now this was actually way off. This was a really bad paper trade and very bad indicative sort of analysis for BTC's price. I predicted that it would surpass 50,000 by the end of 2018, and I was wrong, very wrong. And the reason I was actually wrong is I didn't actually predict sort of the whole false positives regarding the news and backlash that would have, even though it sort of have happened in the past. And I sort of just want to show you this to show you that not every analysis, even regarding how professional it looks, is true.